The bank expects South Africa's GDP to contract by 1.2% in the second quarter, but sees overall growth for the year increasing by 1.8%. Nedbank's Chief Financial Officer Mike Davis says they are seeing a resilient customer base, even though things are likely to get tough in the second half.
If you go into the beginning part of 2022, obviously our retail clients have de-geared, they've increased savings levels, and that's put them into a reasonably good position going into the start of 2022. And as a result of higher transport costs, higher inflation, and higher interest rates, we are seeing resilience in that retail consumer or client base. But I think things may get tougher in the second half, but certainly clients and that consumer base starts 2022 in a good position.
Davis says demand for credit for corporates and household continues to grow.
In the household segment, we saw the same momentum we saw in 2021. So that book continued to grow at around 6%. In the corporate segment, we saw very slow growth, certainly in the first quarter and the first part of the second quarter 2022. But we saw stronger growth into the back end of Q2 2022. So certainly corporates starting to grow into the back end of Q2, and we would expect that to continue into half 2 2022.
Nedbank says it fears that consumers may start to dip into their savings as the economic climate continues to bite.
We are likely to see that given high levels of inflation, which we do expect to peak this month, and obviously higher interest rates. We are expecting a further 75 basis points in the prime interest rate through to the end of 2022. So that is likely to put slightly higher levels of strain on the consumer.
The bank has also called for the urgent implementation of the Energy Action Plan, saying electricity supply is a binding constraint on economic growth and job creation. Diabosito, SABC News, Johannesburg.